Hi, Bruce Miller here of Miller Financial Group. We just wanted to take a moment of your time to tell you about some of the things that we've been concerned about and thinking about as we invest your assets over the last month and over the last quarter. Today, the last day of May, was a difficult day and the end of a very difficult month for the market. The Standard & Poor's Index, which is one of the key things that we measure performance by, was down a little over 6% for the month. That's after a wonderful first quarter and a slight drop the month prior to May. There are several factors that we think caused this drop to occur. The most prominent is likely the European situation. It's a very difficult situation with very limited options as far as how they're going to bail out the euro. The most recent headlines have come from Spain, which has massive problems with their banking system, so much so that the European Union has been asked to provide as much as $24 billion to bail them out. That's a fairly whopping sum for any economy. So besides Spain, of course, we've heard the stories about Greece, and there's the worry that after Spain, we may be seeing a domino effect with other countries that might have problems with the euro. There are many stories, many rumors floating around about what might be best for the European economy. One, of course, is Greece totally dropping out of the euro. A second would be for Spain or some of the other economies having troubles to be bailed out by the European Bank. One of the more troubling rumors going on is that possibly Germany may get sick of the whole situation over there of bailing out country after country and pull out of the euro themselves. At any rate, Europe continues to be a problem with the markets, and I think it will continue into the summer. I don't think there's an easy fix to this. In addition to Europe, things in the US seem to be going pretty well for the first few months of the year. Economic reports were reasonably positive. There were still some problem areas, of course, with real estate and unemployment, but many of the other ancillary economic reports were somewhat good, making us think that we would be isolated from the rest of the world and be provided with a fairly solid, stable economic situation and an increasing market. That, of course, happened in the first quarter. Profits dominated. Profits were pretty good on a corporate level. But then after corporate profits faded away at the beginning of May, then some of the serious problems started to take over the headlines. And that's why we seem to have the big problem with the big drop in the market in May. Pretty troubling things are going on. Today in particular, the Chicago PMI, which is a measure of industrial activity in the nation, was down. So much so there's even talk of a possible recession into the summer. GDP in India came out a little bit lower than, which had an impact. The unemployment numbers continue to plague us a little bit. ADP report. Tomorrow will be more telling with a more solid report that's coming in, so we'll see what's happening. Anyway, it's been a very difficult time. Looking into June, I continue to see more problems ahead for Europe. Because of that, I've increased our cash positions to take a little more conservative stance. And I continue to think that U.S. reports will not be as favorable as they were in the first quarter. There are some positive things going on. Oil, tremendous for our economy in the long run, in that oil has dropped by about 17% this quarter. That will translate to lower fuel prices at the fuel pump, and we'll probably see that in this coming quarter. Essentially, that will provide somewhat of a lift to the economy because it functions somewhat as a tax break with more dollars in the pockets of the U.S. consumer. So that's a pretty positive thing. And a second positive thing is the fact that interest rates have been driven to historic lows, with 15-year rates as low as 3% and 30-year rates as low as 3.75%. As a continuing effect, this can only be very positive for the U.S. I think it's only a matter of time before these lower interest rates get the engine of our economy rolling again. So those are two very positive notes. So in this next quarter, we'll be, of course, looking for U.S. economic reports. We'll be watching Europe, and we'll continue to take a very conservative position until we see things start to perk up. Anyway, that's it for now. So, Ben, let's go make some money.